Disruption, transformation, and opportunities are everywhere. Who will stay relevant, adapt, and grow? At Siemens, this is our answer. With technology, we create impact and value for our customers, addressing their major challenges to master digital transformation, increase sustainability, and adapt to rapidly changing markets. In industry, infrastructure, mobility, and healthcare that are forming the backbone of our economies and societies. As a focused technology company, we combine the real and the digital worlds to help our customers become more efficient, more resilient, more sustainable, and ultimately more competitive. Making the places where we live and work smarter. Making the movement of goods and people more efficient. Making manufacturing more flexible and productive. Making healthcare more effective. And making our future sustainable. A company driving digitalization. A company empowering its customers. A company transforming the everyday. Siemens.
Well, welcome, ladies and gentlemen, to our international case study today, which is going to feature the multinational company called Siemens. And now I'd like to introduce Alexander Munca. Alex is the CEO Insurance of Siemens AG, and he works as part of the controlling and finance function within the financing unit of Siemens. So, Alex, welcome to the Aon Insights Series, and please, can you give us some further insight into Siemens as an organization, please?
Great. Thank you, Jason. Thank you for the nice introduction. Also great to see you. A great opportunity to be here. And I'll certainly try my best to give you a little bit of flavor what Siemens stands for and the transformational processes that we find ourselves in. And then obviously we'll talk about my core competency, which is insurance risk management. Now, at Siemens, we pride ourselves to be a focused tech company. We've been in one of the largest transformational processes of our history, making a company that used to be a large conglomerate of a variety of different divisions into a very focused company that has three brands: Siemens AG, the company I work for, Siemens Healthineers AG, it's the healthcare business, of which we still hold a majority of 85%. And then last year we carved off Siemens Energy AG, a minority of 35% at Siemens, still carrying the brand, but working and operating independently in their markets. Now, these are some of the numbers that we represent. We have over 290,000 employees that are working, we believe, tirelessly to transform the everyday for our company but also for our customers. We have, despite the pandemic, had a very good last financial year and a pretty good, strong first half of this fiscal year. As our fiscal year ends on September 30th and starts on October 1st, I can't say any more about it because we're in the silent period. But from this position of strength, with a strong net income and almost 15% adjusted EBITDA margin, we believe that we can move the company forward and do what we like to do. This is a little bit of history. Now, Siemens has been around since 1847, founded by Werner von Siemens, our founder, who developed and invented the pointer telegraph. Siemens has done and operated on a variety of different markets over the years, or over the century, I must say. We are now into more of digitalization and automation than we used to be. And if you look along the timeline, you'll see some of the success stories. But like many companies, we've also had some businesses where we were less successful, which we had to say goodbye to, or which we sold off over the years. I said at the beginning that we are working with 3 brands, Siemens AG in the middle, Siemens Healthineers to your left, and Siemens Energy. All 3 are part of the new DAX 40, the stock market in Germany, of which we are very proud. And we believe that the current setup is exactly what it should look like for the future. This is something that our new CEO, Dr. Roland Busch, has recently said, which I find describes very well our current strategy. After the Internet of the people, what we all know, the next decade will be all about connecting machines and industry. The Internet of Things, as I think most people refer to, and there we are right in the middle of it with our services and our products. Now, I find this is quite interesting as well. By making acquisitions totaling more than 10 billion, by making massive investments in research and development, we've managed to build and expand our digital business for many years now. To be successful, we need competitive products and solutions, and that is what we do in order to create value for our customers. We have more than 40,000 employees globally in research and development who we think are doing extraordinary things. And in fiscal 2020 alone, we've registered almost 3,000 patent applications. We are obviously also partnering with universities and investing quite a lot in academia and research. Now, these are the businesses from a strategy standpoint: industry, infrastructure, mobility, and healthcare. And to give you some gist of what this actually represents, you can look at the numbers and also the lines below. 60% of the manufacturing tasks of our industry clients could be automated to improve productivity, quality, and safety, and thereby unleashing massive human potential. Good planning can help drastically reduce both the operating cost of infrastructure and the resources they consume. 80% of life cycle costs are now incurred in the operational phase. These costs can be significantly reduced through more efficient planning. Here, our technology, we think, is a game changer for sustainable planning and use. The mobility sector holds great opportunities as well. Our technology allows us to increase the capacity of rail networks by 20% without the need to lay any additional track. And last but not least, healthcare, especially in these times, artificial intelligence and digital twin technologies can save people's lives and reduce stroke-related costs worldwide by 50%. So I think that's quite impressive. Now, Siemens is everywhere in everyday's life. We help our customers to transform their businesses and industries, and in doing so, we change the lives for billions of people for the better. Because of many small and large contributions to a more sustainable life add up to a huge impact. In fiscal 2020, for example, we helped our customers to save a total of almost 150 million metric tons of CO2. And through our work, we contributed over 280 billion euros in fiscal 19 to global prosperity. We are driving the automation and digitalization of industry. A third of all automation systems in the world come from us. And we enable access to healthcare in underserved countries with 147 million patient touch points. And in fiscal 19, Siemens made 5 million jobs possible, including 2.6 million in developing and emerging markets. So you can understand, Jason, why I'm very proud to work for this company.
Absolutely, Alex. Thank you for that great overview. And I think everyone watching this case study around the world would identify with the Siemens brand, with the different devices and technologies that you use, and an incredible overview of how Siemens is positioning itself for the future to capitalize on so many specific growth opportunities that you referred to, Alex. So a terrific overview. Alex, what we really want to do now is give the audience, if you like, a tour of your role and your function and the role you play within Siemens from a risk management, risk financing and insurance perspective. So could you please now give us a deeper insight into how Siemens identifies, quantifies, mitigates, and transfers risk, please?
Yeah, absolutely. Now, this is very small and very busy, I know, so no worry if you can't read everything, but it's just to give you an impression what sort of techniques and technologies we use in our risk management process. Starting maybe with the fact that since we're not a regulated company, there is no one single centralized risk management functions. Every business owner in Siemens is his or her own risk manager, which I think is very important, especially in times where you want to empower people to really own the business that they are representing. Now, having said that, obviously there are functions in place who and which are dealing with risk, operational risk, financial risk, and we come to part of this later. This is overarched by an enterprise risk management process, like many of you probably know. This is what it looks like at Siemens. And we're looking at risk and opportunities, by the way, on a very regular basis, identifying them and then quantifying them by likelihood and by impact. Now, it's important to say that what we want to look at the end is the net risk. And why am I saying this? It's because whatever mitigation measures, prevention, but also insurance as an example, we can take and execute on before actually putting risk in our risk management tool needs to be looked at from a net base. And everything else, I think you're probably familiar with. We're probably not differentiating very much from what other companies do.
Yeah, absolutely, Alex. Certainly some familiar elements of what you've just shared with us there. Obviously consistent with what you're doing at Siemens, which is great. So, Alex, you mentioned your team sits within the CF financing team at Siemens. So I assume that means the finance team. Can you explain CF financing in more detail and where your specific function fits, Alex?
Yeah, and probably starting with the abbreviation. I think only the German army and Siemens are using so many abbreviations. So CFF stands for Controlling and Finance, which is the reporting line from our corporate CFO, and the second F for financing, which is, at the end of the day, if you want to look at it this way, we are the financial risk managers of Siemens AG. Now, this is the organizational structure. And if you look at it from the left to the right, you will see the three major treasury functions: cash management, payments, FX and commodity risk, group funding and liquidity. And then we have guarantees and letter of credits. Then we have pensions to your very right side. And then in the little nice green box, this is insurance risk management. Insurance is all about design, implementation, and management of adequate insurance cover for our company. As looked at as a group, we are trying to contribute to loss avoidance through risk analysis and risk consulting. So it's more than just the procurement of insurance products. We provide access to attractive offers for private insurance needs for employees, something very important for us in Germany, also very traditional. And finally, we manage a rather large captive reinsurance company that is not domiciled in Malta or in Bermuda, but in lovely Munich, where we think we have a better hold on how to deal with it, especially in these dire hard market times that we are facing right now.
Right, thanks, Alex. So if we want to just do a deeper dive into the specific functions of CFF insurance, or the insurance function, what are the key objectives of the function that you drive within Siemens, Alex?
Yeah, here I've made my life easy. I just brought you the slide that we usually show internally when people need to understand our vision and our strategy. If you look at it, we are, and I really mean that when I say it, we're committed to being the global trusted provider of intelligent insurance solutions. We are not there to only tell people what the insurance that we procure looks like. We are there to better understand the operational risks, see what financing patterns we can use, including insurance, but not only insurance, in order to finance it, transfer it to our own vehicles or to the insurance markets, and then also see if we can use insurance as a financial technique in order to make our core business, Siemens core business, become more successful. So if you look at the three pillars, it's about downside protection. This is, where you don't want to hear about insurance, because if you hear about us, it's because you've got a claim, and claims are never very pleasant, even if they're paid by an insurance solutions. In the middle, it's what we call business support. This is where we are using insurance in the most general term in order to enhance Siemens business. And then to a certain degree, we also do third-party business when we have clients, customers who do not have access to insurance markets the way we have it, not the same experience when it comes to our own technologies. Then we will help them procure insurance, and also when it comes to our own employees who want to buy insurance, who expect the employer to have certain insurance lines in place. And all this is obviously followed by risk data and intelligence, not a very new concept, even though there's much talk about it these days. It's all about understanding you have over a large number of decades, what sort of reference points you need in order to understand and price your own risk before you go into the market, and that get the best solutions, move the borders of insurability to your profit, and place insurance lines that you think are necessary for a group such as ours.
Great. Thanks, Alex. What's interesting to note here is the third-party business component of your strategic focus. That's not common in some multinationals, so we might dive a little bit more deeply into that in a few moments. So can you provide us, Alex, with a bit more insight into the key corporate, employee and commercial functions of the insurance strategy that you drive?
Yeah. So these three boxes, again, we don't have to go into all of the details, but these three boxes is a different way to look at the business the way we do it. It's commercial lines. This is where we come from with our own captive broker. If you look at it down on the lower part of the slide, it's called VVK, our in-house captive broker. We are placing employee lines in the larger sense of the word, employee benefit insurance, so to say, in close connection and alignment with our colleagues from HR who are responsible for the design. And we're selling private insurance lines for all the John and Jane Does in Germany who would usually go to Allianz trying to get the best deal. We think we can get better deals because the lever we have with most insurance companies is so much bigger. Already talked about. The second one is on your right hand, on the right slide, the lower part of the slide, Siemens Private Finance, the vehicle we use for our private insurance lines. And finally, Risicom Rückversicherungs AG, our captive reinsurance captive, which is also very important to understand, also holds the possibility to go directly into the reinsurance markets and place business as a broker. So we have a broker. We have a broker authority for Risicom, which helps in these times as well. Obviously no complaints here. We also work with Aon, as you know, but sometimes it's much better for us to directly talk to reinsurers and to retrocession markets.
Great, thank you. And so when we look at this illustration, what I really take from this, Alex, is a very diversified insurable risk strategy, because you've got traditional commercial lines, but then combined with employee lines, which is not always common for our multinational clients. And then, as I mentioned before, the addition of private lines as well. So a very diversified strategy that's going through your insurance team. Can you give us a deeper appreciation now, Alex, of the way the organisation is set up, your insurance function, and the responsibilities of your team specifically?
Yeah. So this is a more organizational view on CFF insurance. We have one line of responsibility with everything that's around global and private lines. I call them my own broking center. No offense here, they're not as large as you and not in direct competition with Aon, but I think it describes very well what they are doing, and all the necessary mandatory insurance, industrial insurance lines, and also the private lines that we are buying and offering. Then the second one very important as well, has actually started as managing our captiveness, developed into a function, a segment within the insurance function that is all about risk financing strategy. And also because it's quite strategical, some of you guys who are dealing with employee benefit insurances know how challenging it can be inside and outside of a company to get that straight. Also deals with the employee insurances. And finally, the third segment, client network and quality management, is all about managing the networks that we're dealing with. Our internal networks, our stakeholders outside in the Siemens world, the CFOs in our various countries who are responsible for insurance in their country and region, but need a lot of help and a lot of hand-holding in order to execute on that responsibility. And then also the management of the networks with the brokers we are working with, Aon being one of them, and the insurance carriers that are insuring our international insurance programs. So in a nutshell, this is what it looks like. You can obviously organize this in different ways. There's not one single best organization, but this is what has proven to be successful now for quite a number of years.
Yes, absolutely. And Alex, when we look at all those different components and we look at the global revenues that you shared with us at the introduction of the presentation, an organisation the size and scale of Siemens, your cost of insurable risk would be significant, a very significant number. Can you take us through how Siemens quantifies your risk tolerance to really determine how much insurable risk you retain versus how much you actually transfer to the commercial reinsurance market?
Yeah, this slide is a little bit simplistic because for obvious reasons I can't go into the numbers, even though I know, Jason, you would love to. But it also shows that we have quite an experience in establishing and measuring risk tolerance. What we do is we're trying to not get into anything that we consider a low risk. So we are working on deductibles on a business level that we think, and that's something that we constantly check on, because obviously when our businesses feel that deductibles are too high or too low, impacting on the premiums or claims paid, we need to adjust. But this is where we will introduce working deductibles different in every line of business for obvious reasons. Then we come into what we call the medium severe risk area, which is something that from a business perspective needs to be insured, because this is where insurance has a value, even though the balance sheet of most insurers isn't as large as the Siemens balance sheet. But this is where it has a value because it helps understanding the risk. And obviously, we also need the administrative processes in order to manage and get the claims paid. So we will transfer most of this medium severe risk into the market and then reinsure it back into Risicom. Because from the balance sheet perspective at Siemens, we think it's still something that, we call that left pocket, right pocket, doesn't make a lot of sense to keep the premium in the market. By the way, we've done that in the soft cycle, throughout the entire soft cycle, and it really helps us managing our risk and also the development of premiums and capacities much better, we think, than in most of our peer group. And then finally, we define what we consider large or catastrophe risk by certain risk types, but also by severity and quantity of risk. And this is where we really like to use the insurers as the risk takers. This is where we try, and usually we manage to transfer the risk into the market and also have the market keep the risk. So this is different in different businesses. It's also different in different insurance solutions. This is why you see different spikes. But we think we are pretty close to what the necessary and right, even though this is subjective, risk tolerance for Siemens should look like. And then obviously, we can also use this in order to act opportunistically in markets that are changing to the better or sometimes to the worse.
Thanks, Alex. A really good insight there into your risk financing philosophy. You mentioned before reference to the business unit level retentions as well as the captive levels. where you actually transfer the risk out and then you actually reinsure it back in through your captive Risicom. How do you determine that optimum level of risk retention and risk transfer for the business units and the captive?
Well, obviously, this is where claims experience and claims data helps a lot. But, another maybe overly simplistic chart on that question, it's small risk, medium risk, catastrophe risk measured by claims frequency and claims amount. And then we establish operational deductibles, group risk retention that we secure through Risicom, and finally risk transfer. And even though this is a pyramid, it would, if you looked at the real numbers, probably look a little bit different. But the final risk transfer isn't that much bigger than what we are keeping within the group. Let me just say so much. And then obviously, before you ask the question, we also have to make sure that Risicom is protected. So we also have systems in place to make sure that they are not carrying all of the risk that they are reinsuring, but that it's kept at a certain threshold.
Yeah, sure, Alex, absolutely. And I know a lot of clients that are listening to this case study are always also probably thinking, what classes of risk do you commercially transfer to the market? Can you give us a little bit more insight there, Alex? And also, you just touched on how you try to protect the captive Risicom. Can you explain how that works as well?
Yeah, the class, this is just representative. So please don't think that necessarily our liability program needs to be bigger than our property program or the other way around. It's just for matters of example. We are buying the traditional classes of insurance with the exception of cyber, because I really don't think it's traditional. I personally don't think it will become traditional, but it's liability, property, erection or risk, and marine for Siemens. Oh, by the way, I think I missed marine. Even my colleagues would probably crucify me for that. And then a couple of years ago, we did start to buy cyber. Not only as a standalone product, but as something that we think can make sense from a capacity standpoint on top of the cyber insurance elements that we have throughout most of our other lines. Then talked about employee benefits. That's mostly reinsured, by the way. We don't believe that's something that should be in the market. And all this and parts of this, this is the light blue bits in the columns that you'll see, are reinsured into Risicom. And this structure may change slightly every year, but the basic concept has stayed the same for more than a decade now. And then Risicom is protected by a multi-line retro cover that we've arranged for markets.
Yeah, absolutely. Thank you. So very mature risk financing structure here, with business unit retentions, captive retention, a multi-line retro cover. Obviously, Alex, when you look at this structure and the way you've put Risicom together, which has obviously occurred over a very extensive period of time where you've refined the structure continually and you're constantly reviewing it, how do you use brokers to assist you in managing this entire process?
How do we? Well, we use them as service providers first and foremost, and only very rare exceptions you will see any broker placing insurance for us. We prefer to do that ourselves for a variety of reasons. And I've said that I think before. If you look at this slide, which is a little busier, it represents basically an international insurance program, and this is where our own structure, and also if you look at it from an economy of scale standpoint, the resources we would have to have in order to administer this globally comes to a natural end. So this is where we will use companies such as Aon with their major and owned networks in order to make sure that the services we provide centrally, you can look at Aon in this case like our extended working bench, are also one-to-one offered to our local colleagues. This is the first function. Then the second function is we use brokers in order to make sure that we stay on the tip of our toes when it comes to the knowledge of certain insurance matters. Our colleagues who are doing liability or property are the best liability and property guys you can find at Siemens for obvious reasons. And they're usually very well trained when they start working for us. But after a while, having worked for a company such as Siemens, you will see that they will be a little blind to the market. So we need brokers in order to make sure that we understand everything that's happening in the market, in the lines of businesses. And then when it comes to the development of new ideas, we would like to see partners on the other side of the screen in these days, usually the table, to make sure that we are not missing out on anything and who help us developing ideas in order to make risk financing, insurance risk financing even more sophisticated than we think it is right now. And this is, I mean, I'm talking a little bit beyond the slide now, but this is how we will create or how we will set up a typical international insurance program with local policies, everything reinsured to the central insurer, the primary insurer in usually Germany or somewhere in Europe, and then reinsuring it into Risicom and then capping the Risicom risk with the retro cover that I've talked about
Absolutely.
before.
Yeah, great. Thank you, Alex. And so, Alex, obviously a lot of traditional risks are being underwritten through your structure here, through Risicom, obviously employee benefits, and then also you made reference to the insurance function also underwriting third-party risks, so a heavily diversified strategy. Let's just think about the future now and talk about the future. Can you give us an insight into how Siemens is thinking about emerging risks if we go back to that previous video that we showed at the start of the session? And do you believe the market's going to be able to respond to the evolving needs of multinational companies like Siemens moving into the future, Alex?
Yeah, well, that's a really, really tough one. Fortunately, we still have a couple of minutes now. These are the typical emerging risks that you will see. Also, by the way, if you look at risk registers or if you talk to people from the business, but also from insurance functions in a number of companies. This is not Siemens specific. So, obviously, pandemic risks as we see right now, cyber. These risks, by the way, are linked if you look at it from a supply chain perspective. Then NatCat, we are used to having NatCat risks in countries like the US, in Asia, but what has recently happened in Germany has really, really been tough for people to grasp and understand, and it has made it even clearer that climate change is not something that you can any longer question. It's right in front of our door. So we really need to think about it. And, I've said it before, supply chain kind of overarching topic, not just recently, but also if you look at what happened in Indonesia, Japan, almost 10 years ago. This is one way to look at it. Then another way to look at it is if you ask yourself, well, what part of our balance sheet as of today, statically, can be insured? What part of the risk that we are running on our balance sheet can be insured? And the answer actually is quite sobering. This is not mathematical, but I'd be surprised if it was anything more than 10%. This is right now, with everything we have in place already. Now, with these emerging risks becoming a reality more and more, the number will gradually go even further down, especially with things like cyber, because if you look at it from a transformational process, and I've shown you what Siemens is currently doing, we're less and less producing stuff, and we are more and more in the cyber space with digital twins, with digitalization or automation processes for our clients. This is all about cyber, and the cyber market is, if you look at it from if you look at everything, it's actually non-existent. Whatever we can buy right now doesn't really cover any of the core risks. So, and if you now try to wrap this around, get your head around it, I think is the right expression. You will see that the insurance market, the financial markets, if they want to remain relevant for companies like ours, they need to do something. And it can't just be about adjusting prices and taking back capacity for lines that have recently been invented, and now because insurers start to finally understand what they're doing, they think it's a great idea to work with exclusions and less capacity. Now, this is not how it's going to work, because at the end of the day, the people who are earning the money, which pay the premiums, which then kind of, make you and the insurers and also us live. They want to understand how insurance works and where it becomes relevant. And now, if you not longer look at it statically, because we can't, because this is an ever-changing and developing thing, and we're talking about markets, we're seeing that the insurers are currently not doing what they need to do. So my answer to your question is, just to remember, you asked me if the insurers are responding to it. The answer is no, they are not, but they need to in order to survive, because otherwise they'll just be service providers in competition with Aon. And quite frankly, before I would buy a service from someone who originally wanted to sell his balance sheet, I'd much rather go to a real service provider. And at the end of the day, it might turn into a story where the insurance guys in a company like Siemens will become less and less important. I'm not saying that we will be out of the job. We'll just do different jobs then, and then we'll have to look at things totally differently. So my personal prediction isn't overly positive. But then again, if I look at the resilience that our market has traditionally had, and just as a reference, some of our insurance policies are almost 100 years old. I'm sure that some of my predecessors have faced similar challenges. I remain slightly optimistic that we'll kind of keep the car on the road and drive it into the right direction. And this is where the insurers, the brokers, and also clients represented by experts such as ours are sitting on the same seat. A little bit tight, but I think this is how it needs to be.
Yeah, absolutely. Thank you. It does, Alex, absolutely. And thank you for your views there. And in addition to your role at Siemens in running the insurance function as CEO, Alex, some of our listeners may not be aware, but you're also the president of the German Risk Management Society, which is a very important entity within the German insurance industry and risk industry. So if we just carry on this theme about the relevance of the insurance market, just to perhaps finish off, Alex, let's talk about government. Because when we look at some of these really big emerging risks that you've got up here on this slide, particularly pandemic, do you feel that there's a role that government can potentially play moving forward as almost like a market or a facility of last resort? Do you have a view on that?
Yeah, absolutely. Yes, with a big exclamation mark. And also, if you look at pandemic or NatCat, these are risks that have already materialized, and I am pretty sure that cyber will be a risk materializing during my professional lifespan. So if you take these three risks and you look at any large scenario that we've seen or that we can potentially see, you will see that this is beyond the capabilities of any financial market by itself. And this is also where I stop pointing fingers at the insurers. I'm not saying they need to develop the capacity for all of the claims. What I'm saying is they should do their job, analyze and understand risk, and then make sure that the right products are developed and put into place. And this is where I think the government comes into place. Because if you look at the recent pandemic, I can only speak for Germany, and also the NatCat that we've seen, the government will always have to react. And in which manner? They will somehow find means or borrow money in order to find means to pay out to people who couldn't or didn't prepare for these risks. This is always in reaction of something. But the way this is done and the way also the administrative processes, the way like we see them, they very much look like what insurance companies can do and should do. And this is why we think we need to talk about PPPs, private partnership models, where we actually, together with the insurance industry, develop schemes where insurers can sell insurance solutions for these risks that can then potentially be reinsured in some other markets, and then at the end can be and should be state-backed. By the way, there are reference points in place in the US and in Germany when it comes to terror risk. In the early 2000s, we've seen these solutions in place and quite successfully in place, and we think we should have a fresh look at it and then see what we can do. Unfortunately, for a number of reasons that we can't go into right now, the German government has not expressed any interest, or much rather has left us quite dry when we are trying to lobby for these talks, even though we think it's the most reasonable thing to do. Because if you continue to be reactive on these risks, all you can do is spend money of the next and the next generation and the generation after the next generation, and also not in a very differentiated manner, because it does make a difference. I know this is not very popular to look at anyone who's had a claim, who's been concerned by a net cat event, to see if insurance could have been bought and hasn't been bought for reasons that should then be taken into consideration. Whereas when everything is done afterwards, none of these considerations will be part of the process. So we very much think that state-backed, government-backed schemes is something that we should talk about. And as GV&W, together with the German industry, and we are absolutely in line with most major insurance companies and also the large reinsurers, is something that we really need to talk about. Otherwise, we'll just wait for the next big event, and eventually we'll have to have this discussion.
Yeah, thank you, Alex. It's a great point, and we've seen, as you say, other governments in other parts of the world be able to adjust to understanding how to underwrite some of these residual risks that can't be financed by corporates or communities or, in fact, the insurance market. So I think you're exactly correct in your thinking there. You also raised a great point today too, Alex, around climate change and the impact that the recent floods have had on Germany. I think everyone now can see that this whole impact on climate is really going to start impacting our thinking as risk professionals as well now around how we try to retain and transfer this risk as frequency increases and severity potentially worsens as well. So, Alex, thank you so much for an incredible overview of Siemens, the organisation, but also, most importantly, your risk management and risk financing strategy. So much covered in such a short space of time. And on behalf of Aon, Alex, I just really wanted to sincerely thank you for your willingness to share this story with us today. And thank you so much. And I'm sure there'll be many questions coming in after this session. And we look forward to your future participation in future Aon Insights Series events as well. So thank you so much, Alex.
Thank you. This was an immense pleasure. And well, stay safe, stay well, and I'm looking forward to seeing you in person soon. Bye-bye, Jason.
Thank you, Alex. Cheers.